So here we have a simulation of Euro USD. So this is the 15 minutes chart. Okay, so this is a simulation. Okay, so here I want us to look on how the market behaves. So the market can be on a bearish trend. When the market is going down, it is on a bearish trend. So here we had a bearish trend. Here we had a bearish trend. Here we had a bearish trend. And when the market moves up, we call it a bullish trend. So here we had a bullish trend. So there is another scenario where the market will be moving sideways. So like what it did here. So the market is bound within a range of price. So it is bound within 1.13649. So the numbers are here. So 1.13656, 1.13790. So price is bound within this range. So price movement is bound within this range. We call this a range market or a consolidation market. So when the market moves in this way, we call it a range market. So the market is ranging, a ranging market, or we call it a consolidation. So the market is at rest, consolidating, and it will continue with the trend. Consolidation. Okay, so let us now go and observe using this same Euro USD chart. So I've played the chart. So this is 15 minutes time frame. And here we have the period separator. So the day started at this point. And so far, this is the lowest that price has reached for the day. And you can see the market did actually trend going up on this chart. So on this day, we had a bullish move, just as the market was ending the day, and we are on a new day now. And usually, when a new day starts, the market would start a new day with a consolidation. Usually, to start a new day with a consolidation. So you can see a bullish, bearish, a bullish move. So you can see how the market swings. So we are on an uptrend here. So we are making new highs, making new lows, making new highs, new lows. So we are breaking this previously made new highs. That means we're on an uptrend. So the day did end. So we were on a bullish trend also on this second day. So this is 19th, 2019, so on 12th March. So we are back in consolidation again. So when the day starts, usually starts with a consolidation. We draw this up. So it starts with a consolidation. You can see for a few hours, and then the market continued with the trend. So this was a consolidation, and we are on a bullish trend right now. So you can see we had a bullish trend here on this day also. And the day ended with a consolidation, and now you can see a bearish trend had commenced. So we're now on a bearish trend, and the day did end off with a consolidation. So this day we had a bearish move, and we're back to the bullish market. So this is a simulation. The market does not move this fast. So when you're in the market, each candle here would take 15 minutes for it to close. So we have three types of market trends. So we have the bullish market trend, we have the bearish market trend, but also we have the ranging market or the consolidation. So with the ranging market, the market would simply be the price movement would be bounded within a range. And as the market rises and falls, it will be swinging. So you have the swings highs, the swing lows, and that is how a bullish market is created, and that is how a bearish market is created. So a bearish market would have swings going down, and a bullish market would have swings going up. So this is the same pound chef. So for this day alone, the market did start its move with consolidation. So this was a ranging market here. And you can see we had a consolidation here. We also had this as a consolidation. So after this consolidation, we had an uptrend, and then we had this downtrend. We had Swiss franc news this morning, and this was the effect. The volatility here was brought about by the fundamentals. And right now, you can see the market is showing a reversal. So it's showing that we are now going up. Okay. If you can see how price moves in real time. So this is the 15 minutes time frame. So if you go to the 1 minute time frame, at least here the candles would somehow print faster. Okay, so let us observe higher time frames. And you can see here, this here was a very good consolidation market. We had a downtrend market and an uptrend market. And then we had a consolidation. So when there is a downtrend like this, what you need to do as a trader, you need to sell at this point and you need to exit down here. So basically you'll be selling at premium prices and buying at discount prices. So when you take your sell order, when you execute your sell order right at this point and exit at this point, you will have profit because the market is within your favor. And when the market is buying, or when the market is on a bullish momentum or a bullish trend, you need to take your buy order at this point and capitalize on this move, exit at that point. So when the market is falling, you need to sell. So you sell early, you exit at this point. When the market is buying, when the market is going up, you need to buy. So when the market is going down, you're selling. When the market is moving up, you are buying. That is how you make profit. So when you analyze, what you're doing is you are looking to anticipate on the price development. So you're looking to anticipate if price would go up or would go down. So suppose you had anticipated for this move before it happened. Then if price reaches this level and gives you the conditions that you need to sell, that's where you take your sell order and you make a profit out of it. And if your analysis had an anticipation of taking a buy entry at this point, then right now you would have been in profit. So that is the essence of doing analysis. So you're doing analysis in order to predict for the price movement. And if your prediction is right, then you will be in profit on that trade. And if you enter a trade and maybe you took a buy at this point and the market is selling, that means you will be in loss. So that is how this market works.